World Financial Group offers entrepreneurs from all backgrounds the opportunity to start their own business on a level playing field. Dr. Jana Woodhouse, receiving the WCM Wall Street Pioneer Award by the United Black Wall Street of America, Inc., is one of those entrepreneurs.
I see WFG and TFA as a place where African Americans with an entrepreneurial mindset can flourish. And the bonus, we help families and serve the communities across the country.
To learn more,
we are the sons and daughters of the soul. We are resilient and forever forward-thinking. We ask for nothing else than the opportunity to live and to create the lives that we were meant to live. We want nothing but an equal chance at options and possibilities. The same possibilities and options to live out our potential as our fellow man. We want to be heard, understood, and expressive in our reality. We are the future. We are the creative. We are here.
She was told that she couldn't play with the boys. She was told that they were too big, too rough, too strong. She was told to give up her dreams and move on. She was told to just be pretty, be quiet, be a lady. She was told that women had to stay on their side of the court, stay in your lane. Playing and competing with men was insane. She was told that men and women would never be equal. Dreaming like that would only be linked to your mind, to your soul. She never listened. She knew that their thinking was old. She was magic. She is the definition of spirit. She is what champions are made of. She is now.
Well, welcome to Access Wealth Nation with Dr. Jana B. Woodhouse, giving your checkup from the neck up, getting information to be financially literate. And so today is, of course, part of Life Insurance Awareness Month. And so, as you know, we're broadcasting from Soul City Network and also on WHCR 90.3 FM. The voice of Harlem. And so I'm proud to be able to share some information to have you understand how money works. And so I try to make it so that we all understand and have a feeling and understanding of how we move forward to build wealth. And not only wealth, but understand wealth, because we know how to make it and we sure know how to spend it. But the key is how do we make money work for us? And so we're really going to have some talks today. Today is an extended program. It is an opening of our season. And of course, I'm a ball of information. And so just a note is that there's a lot of things going on this weekend. The African American Day Parade, but also there's a very interesting event that's taking place, and it's bringing African Americans attached to Africans born in Africa, bringing us together to work together. And it's the international conference, and this is just the first one. It won't be the last one. And it's Africa Meets America. And it's bringing business, creative industry, and networking together on the Saturday, the 17th, from 11 a.m. to 6 p.m. All you got to do is show up. It's at the Marriott Marquis Hotel in Times Square, the Astor Conference Room. And I say that anybody who has a business or a business mind need to be there, because there's great opportunities for us to link the coast. And that's a powerful situation because there's lots of money going on there. So I would say to you also, this is sponsored by Echo Bank and also to Blaze Channel Network. you know. And so this is an opportunity for you to expand because we got to think bigger. The United States is very rare that we in business are really following suit and are taking care of business. We know how to, like I said, spend it. So we give it to other people. But we also need to be able to make it grow. And that's what's so important. Also, I want to note is that to start your journey, your financial journey, you can have the How Money Works book. Stop being a sucker, and it's done by two of my partners in business, Tom Matthews and Steve Seabolt. It's over 500,000 books have been distributed, and you can get yours for free. You just send me an email at anagenterprisesinc@gmail.com, and I'll be glad to send it to you. All I ask is that you read it, and if you find something valuable in it, share it. But also, I've been asking folks to take a picture with it to show that you are enjoying this book and that you've learned. I've gotten such great responses and more books to come, but this is the number one financial book on the market. And it's really an easy read. It takes about maybe an hour. It took me an hour and 10 to read it and embody it, So that's one. The other thing is that if you don't have a plan, you're planning to fail. So therefore, if we can be of assistance to you, you can call 646-375-2121. That is for a free financial analysis and no obligation, no obligation. It's just to produce a plan to see where you are and where you'd like to be. That's as simple as it gets. Because if you don't have goals and plans written, it becomes a situation of where you're a wandering generality, as one of my other partners always says. So you need to be focused and understand where you're going, and especially with your finances. I know it's been an up and down market. As a matter of fact, because we're doing so much in preparing today, we have some jewels for you today. I didn't get a chance to see how the market closed. I'm sure it was quite interesting and not bad, down by 173 points, which is about 0.56%. People getting nervous about the market. The key is that unless you're retiring tomorrow, this is not an issue. If you're retiring in the next 2-3 years, this might be a little issue, but I don't think so. I think that you really need to sit with a financial advisor and get your scopes taken care of. So definitely spend time. Send me your thoughts on Anaj Enterprises Inc. @gmail.com. And of course, you can also visit me at anagenterprises.com, our website. Come and let us know what we can do to help you to build your financial future. So that being said, today and all of September is Life Insurance Awareness Month. Oh, excuse me. Got all choked up about Life Insurance Awareness Month. So that being said, we're getting ready today to have a special edition. It's create and be your own bank. I'm going to have to find out why I'm coughing so much, all choked up. And doing so, today we have a special edition, and it's called Be Your Own Bank. Now, I know y'all have heard this a gazillion times on the internet. Be your own bank. How can I be my own bank? Oh, my apologies. And to be your own bank, we're having a session It's going to be, you can still register for it. Part of it is starting at 6:30. I'm one of the speakers. I got to get my coffin taken care of because I got to make sure I'm okay. But if you get on HTTP, all capital letters, HTTPS colon / bit.ly, bit.ly / BYOB hyphen 22. So I'll say that again, HTTPS colon / bit.ly, bit.ly / BYOB hyphen 22. This is, some people say BOYB is bring your own, but no, this is be your own bank. It's the living benefit of life insurance. And I will be one of the speakers. We will be presenting how you can benefit from the living benefit of life insurance, not just something that you die and you leave to other people, which is no problem with that because we have to prepare our legacies. But sometimes that is, we're looking like, well, what's in it for me? And so we have an answer for that. So please, if you can, register and tune in. It's a great opportunity. And of course, share the information. You can come back on and view this and let's make things different in our world than it's been. Build our financial houses. It's so important. And so that being said, today is the day, again, it's Life Insurance Awareness Month. And a lot of people don't really understand life insurance. So today I'm going to bring on one of my associates and partners in prosperity. Some people say partners in crime. We ain't got no crime. We're about prosperity. And so with no further ado, so we can chit chat a bit about what we're doing and what we're looking to accomplish, I'd like to bring on Miss Dorothy Edwards, who is a financial educator with Wealth Wave and making a difference in the community. I am so happy to be working with her. Hey, Dorothy, welcome to Access Wealth Nation.
Hey, Jana, how are you?
I am blessed, dear. Truly. How are you doing?
I'm blessed by the best. I'm glad I got life insurance for me and my family.
There you go. That's awesome.
Yes, ma'am. And the reason why, to leave a legacy so that my family does not have to struggle when I'm no longer here. And that's why you're here to give those pointers.
Definitely, without a doubt. And I'm so glad you got a moment to sit and talk with me. We were also going to have a couple of other reps on that are doing the same thing. I see that one of them is went down. His internet is down. So we'll see what happens. But I'm so happy you're here.
Amen. So, I am too.
Dorothy, tell us a little bit about yourself and what you've been doing in this world of insurance.
Well, I got my license October of 2001, right after the World Trade Center situation. I was supposed to take it back then, but the tragedy happened, so I took it in October. And since then, I've worked with several companies, but my goal has been, and Wealthway has been my best, and New York City Powerhouse team has been the team I'm happy to be a part of, because not only do you teach how we need life insurance, but how money works and the importance of life insurance. And with that being said, we want to leave our families in a situation that when we're gone, there's no struggle. Life insurance is not for someone to party with, but to put aside so that your family can still meet their needs, at least for the next 5 to 10 years.
Mm-hmm.
And that's why we are here to give that advice to people. It's not about us, it's about you and helping you and your family.
I got you. That's so true. So have you distributed the How Money Works book? How's that happening with you?
Absolutely. And I'm waiting to get a couple of them in Spanish because one of the places I go to, or I should say two, in
Mm-hmm.
Washington Heights here in New York City, where
Okay.
the Hispanic population is big. So I will be ordering some Spanish books as well, so that when I speak to them, they will understand and read the book and then call me up, I would hope, and realize that they need life insurance.
That's very key. So is life insurance only for the death benefit, or is there other things that
But
can?
living benefits, oh no, it's because it buries that individual, but it helps the family to continue to live and meet their needs,
Mhm,
especially if there's a family of four and only one parent works
mhm,
because the other parents is taking care of the children. When
mhm,
that individual that's worked has passed on, the other partner and the children have to still live. That's why we call it a living benefit, because it's going to benefit those who are left behind to still meet their needs and not have to move or call bankruptcy or anything like that.
mhm. I got you. I got you. So in the mission, have you reached out to your family and everything? I heard you say your family has insurance, you have insurance. So are you on that mission to reach out to the family? I heard you say that you're talking about the Latino community, which definitely, is part of our family too. We need to
Yes.
reach out, and I know you are a very powerful member in your church. Are you doing anything special with your church family?
I try to work. I use the word try to work with one of the brothers, one of our brothers and partners here. A lot of the people in our church have been our senior citizens,
Mm,
but we have also still reached out to them because there are still uh, products that they can buy.
hmm
Even there are products now that you can purchase if you are obese, high
mm.
blood pressure, and with diabetes.
Oh my goodness, really?
Yes, there
That's
are
good
there
to know.
are companies that will insure you. You may not get that big old policy, but you can get a policy that will help your family when
Mhm.
you're no longer here.
Got it. Well, I'm going to bring on now, and I truly thank you, Dorothy, for sharing your knowledge and your mission. I love that because we mission, but I do understand we have another one of our associates, Edridge Etienne, who has also been with us. Uh-oh. The producer just told me that we sort of lost them. Okay, what does it say? Do you know anything about authenticating the birth certificate?
I didn't understand you.
Mm, that's a question. Do you know anything about authenticating the birth certificate? Which birth certificate?
No.
Yeah, it's the question I have back to Quasar 9L. Which birth certificate? Your general birth certificate or your living birth certificate?
Oh,
Question.
that's
Um,
a good question.
that's one of those things that people need to know. But since this is Life Insurance Awareness Month, how do you feel about? I know you have some guests coming tonight to the event, and so tell us what's your mission as far as getting these people here. What are you looking for them to accomplish and learn?
I just had hopefully two more to sign on before I signed on. I am looking for them to realize the importance of life insurance and that they need it. In actuality, they need help. So I am hoping after talking and passing the word on and giving out information. I am hoping that when this program is over, I will get a call either tonight, tomorrow, or this month during Life Insurance Month.
Excellent. I hope you do too. We're very excited. We have some beautiful examples of how the living benefit and how people can use life insurance as a bank. Just to note, Quasar, yes, there's a way to deal with the certificate of a live birth, and you can still get it. You're qualified.
Okay.
Okay.
Amen. Thank
And
you.
also be sure you can reach out, because there's a lot of things that are out there that can be done and utilized if you just stay in touch. Okay.
Yes, thank you.
Definitely, because there is a difference between those entities, but knowledge is power. And I feel
Yes.
that we really are in a time of where people need to learn more than they need to do. First, you got to learn, because if you know better, you'll do better. But a lot of people just don't know. They don't know the difference between a term insurance policy, and they don't know the difference between term insurance and permanent insurance, and that's one of the things we're going to talk about tonight in the
So important.
session, because people need to know. They need to know for life insurance awareness. A lot of people think, well, my family, they die. And I remember that, I think I met you at one of the series that we did where we talked about, do you want, what was it? You fund you. So all these stories about GoFundMe to bury your family.
I can't stand it. I can't stand it. We met October 18th, 2018.
Wow.
And that was one of the things I said to you is I hate GoFundMes, especially since I am an agent and I come to you and you will not adhere. Now you need to bury a loved one. I will not donate to GoFundMe at all.
I got you. And that's important. And do you find it difficult within our community to convey the information or get the people to move on? I mean, they listen to you, but do they do?
They hear me. They will come back eventually. Are you still selling life insurance? Yes. Well, one lady waited till her mother was 85 with issues. It's kind of late now.
Yeah.
I can't offer you anything that I offered you 20 years ago.
That's true.
You know,
see, that's the whole key is that when you're looking at it from a standpoint of age, we need to get things started, and even for our children. Other communities, as soon as the child goes, they are out there buying an insurance policy. Exactly. By the time the child gets to be 18 years old, they have some cash value that can be used for their education, or to go to school, or buy a house, or start your business, because my philosophy is that I understand education. I would not have my doctorate if it wasn't that I believed in education. But the key is that education doesn't necessarily warrant you becoming wealthy.
Exactly. Maybe not financially wealthy. Yes, but knowledge wealthy. Knowledge wealthy.
That's good. And then you got to go parlay that into some financial, because you pay a lot of money for these schools and these educations. And so, yes, it's so important that we focus in on education in the level, but also training our children to get to the level of go to school. You can go to school, but that education may not parlay you into wealth, but it will help. But the thing is that that's not what you're looking at. See, if you're looking at it, doing your own business, being in business for yourself, You know,
Yes.
the power many people don't even know. But if you own a business and you are the key man, the business can even pay for the insurance.
Yes.
And I know that Anthony Anderson, he did, and this is going to roll tonight also, but Anthony Anderson is talking about the fact that we will insure the flat screen TV, okay, to make us insure the car and the home, okay, and then but we won't insure the person who's made that possible. And then,
Exactly.
like you said, we go to the GoFundMe, and I don't do GoFundMe's either. You know, I believe that we really need to be able to have, you know, because in our community, yeah, we have some stigmas. We have the what I call the trifecta
Yes.
is we have diabetes, cholesterol, hypertension, and we wait until those show up. Now, I know I didn't have any issues until I turned towards my 50s, but I had already had life insurance and it was going on, you know. That's not that's not what I'm looking um for other, you know, I want for other people. I'm sorry. We want for other people is that they get it young and you take care of your little ones, you know,
Hmm.
and have stuff ready for them so that when they get ready to even retire, they would have $1 million. You know, the book talks about the $1 million baby,
That's
you
right.
know, putting away a little bit of money at a time. But again, you don't want to put the money away and Uncle Sam become a member of the family. So
That's
life
right.
insurance or the life insurance industry can help. You know, this is a very powerful situation for us,
Yes. Yes.
you
Yes.
know.
It's so unfortunate that everybody, as Anthony Anderson says, you insure your TV, you insure your phone, you insure your car, you insure this, but you won't insure your life, which means more than any of those things that you are insuring. And that's the scary part about the things when I hear that.
Hmm.
When a person has insurance on everything but their health.
Yeah,
I
because
worked with a lady who didn't have job insurance as well.
mm.
That made no sense.
Wait a minute, she didn't have job insurance?
No, ma'am.
And see, a lot of people don't understand that job insurance lasts as long as you have the job. And I remember years that you used to be on the job and stay for 30 years and retire, but you can't take that insurance with you. So you've got to have something, unless there's something they call portability, that that you can bring it with you, but that's rare. It's usually a group.
Mine came with me.
Yours stayed with you. See,
Mhm.
that's a positive. And
Yes.
then there's other things that are with insurance because as tonight you'll hear is that there's also things like critical care because we didn't die, but we became ill, you know, and we need to be able to cover that. We need to cover, there's so many things that we need to cover to take care of ourselves because stuff happens. And especially in today's world, we in a rough situation there. I mean, who expected that we would have people shoot up a school?
Never, 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 never. Life happens and we don't know where and when does it happen. So very important. Very
Yes.
important.
Yes. So I know that next month is domestic violence month, and so we're going to do something special there too as a group to
Yes.
be on the mission, you know, of bringing this knowledge to individuals, and that too can be with insurance, but even more so just planning, getting the planning done. So when people come to you and you talk to them about insurance, how do you approach it? Is it that you do a plan, or do you just look at them and say you need to get some insurance?
Well, I strike up a conversation about life and Then we ease into, have you protected you and your family? And they'll look at me like, what you mean? And I'll say, do you have life insurance? Because God forbid, if something should happen, are you guys protected? And they will give me a yes or a no. And the reason for that is in 2007, I approached a gentleman outside of my building and he laughed at me. And he was raising his two children. Within 4 months, he was dead without any life insurance, not even starting. He thought it was the funniest thing. So I tell people that story because that's a true story, that if you're not protected, your children, what happens to them? Sometimes family members can't afford to take them. So let's just, if it's nothing that's huge, don't let your family suffer because of your unbelief or your selfishness.
Yeah, see, I tell folks that life insurance is, people will say they don't believe in it. And I say, well, it's not a religion. You don't have to believe in it.
You don't have to
You just
believe
got
in
to
it.
do it, and it's true. On a good note, I remember a story of a client of mine who wanted to protect his son, and he got $1 million life insurance policy. And he
Mhm.
was healthy because at the time when we wrote it, he was very healthy. And then what happened was that he got sick. And it was
Mhm.
about 2 years or 3 years into the policy, he got sick. And then we found out it was cancer. And it
Jesus.
was aggressive cancer. So he died very fast. But
Wow.
he left his son $1 million. And the other side to leaving family money is to educate family, because the young man thought that he would have that $1 million forever. So he was going through it like water.
Yep. Yep.
And I tried to stop him, but it was almost impossible. His auntie tried to stop him. He was thinking that he would be able to do this for the rest of his life. And $1 million, in all honesty, I'd love to say it, but it doesn't last forever.
Never.
You
If you
know,
don't spend it right and do the right things with it so that it can increase and make money for you, you're in trouble.
I got you. Definitely. It is truly, you've got to set up. And that's why I say, just like you, a financial educator, I believe that we need to set up a plan, because if you don't have a plan, you're planning to fail.
Planning to fail. Exactly.
Definitely.
Exactly. Exactly.
So, do you have any words of wisdom? They always say that we're supposed to leave with some words of wisdom of what you think for this month. And I'd like to also acknowledge that Robert Yancey, thank you, as a great follower of us on Access Wealth Nation. Welcome. And so, your thoughts on what you want to leave people with about this month of life insurance awareness.
It's very important that you take a look at you and your family. When you hear the broadcast tonight, take time to listen, understand, and protect your family.
Mhm. Excellent. Definitely protect your family and protect you. We've had some situations where there was really some serious things, and usually when I hear these tragedies, I always say to myself, I pray they had their affairs in order. You know,
Yes.
I pray that they had their affairs, because if they didn't have their affairs in order, it's too late. It's too late. Did you have your will? Did you have your insurance covered? Do the people know where it is?
Yeah.
What you have, and that's so important. So I say to my listenership tonight, you're going to transfer over to the Wealth Wave NYC group. And I hope you will all join us. Of course, if you'd like to register, let me read this off to you a little slower. is that if you go to https dot colon, you got to put colon // bit.ly /BYOB hyphen. I always have to show people what I mean because hyphen 22. And so I say to you, Dorothy, I am so appreciative to be working with you and
Yes.
and moving forward. I know you're on your mission. I'm on mine. We're going to make a difference here in New York, no matter what. It's not going to kill us. It's going to make us better.
Amen.
And keep on that mission. I appreciate the time that you spent and you got on with me. I appreciate this. Your first time on Access Wealth Nation.
Yes, ma'am.
Yes, and I'm glad
ma'am.
that you came on by and shared your wisdom with us. And I thank you so much. And so I'll
Thank
see you in a few minutes. We're heading on to the Be Your
Zoom.
Own Bank.
Yes.
Has everybody thought about being your own bank? That means borrowing from yourself.
So,
That's powerful. That's truly a living benefit. And so I'd like to thank you again. And I'll
thank
see you
you
soon.
for the invite.
Okay, have a good one.
Okay, good night.
Good night. Okay, so we've had Miss Dorothy Edwards on. This is a type of thing that isn't done by just anybody. Can be done by everyone to share the knowledge, to be a financial educator. It is so important. I really was looking forward to a couple other people getting on. It seems like the internet is really having some problems tonight, especially in Long Island, where a few of our associates are. But it's okay. This is Life Insurance Awareness Month. What I suggest to everyone, if you have insurance policies, get with a professional and review them. Sit with them, read them, know where they are. If you do not have any life insurance, get with a financial advisor or an insurance agent and get some. What type? It depends on what your situation is. If you're a little bit financially strained, you can get what I call the rent insurance. Rent insurance, not renting a house or renting a place. It works like rent. You pay 12 months worth of premiums. If you don't die, you pay 12 more months of premiums, but it's a low amount. But why that? Because that can get you started and then get it converted into more insurance later. And then comes the permanent insurance, which I'm a bit of a fan of because you pay into it, you get cash value, you get the opportunity to build, and you have the presence to be able to do more than just die and leave money. You can borrow from it, and not only that, but you can pay for weddings. You can pay for children's education, and all of it tax free. That's one of the things that the insurance world will probably never give in is that those premiums you paid in, it works almost very much like a Roth IRA. You get your money out tax free. The beauty in it is that you don't have to wait till you're 59 and a half. And you can pay for your car, your vacations. You can pay for your retirement, create a retirement income. All of that happens within an insurance policy. I honestly believe, and it's just a belief, but I'll say that when I was coming up, you did not get a social security number till you were 12 years old or beyond, be able to work, 14, 15. I think they started giving babies social security numbers so you could start to put that money up under those children. Do you realize that if you just take $100 a month and get a policy that there's a possibility that that child will have enough cash value to retire the rest of their life. And I know it's hard to see a child and say, oh, we're going to talk about retirement for them, but it's a reality that they're going to live longer. They're not going to probably have Social Security. So the biggest thing for them to do is to have and prepare for their future. And you should help them. And you can get them started. And that's what we're going to talk about tonight at the Be Your Own Bank, is how you can build cash value and then utilize it and pay yourself back at a better rate than what you can get in some of these loans with the bank. Not to downplay the bank, but it's a powerful position to be in. So I hope you will join us. Stay tuned for part 2, the workshop. So please share the link with your friends. The link is https:// bit.ly, that's the bit.ly, / BYOB hyphen 22. So I'm hoping that that will enthrall you. Okay. And what is our stay right here? Oh, our stay right here. Did you want to write that? But I will say is that I look forward to sitting with you all, talking with you. And we're going to have a lot of workshops covering the rest of the year. Or it says, or stay right here. Okay, so you can get a chance to see what we're offering right here on Access Wealth Nation, because we'll have Soul City is also filming and covering it. And so you won't miss anything. Just stay, give us a few minutes. I'm going to travel over to the next room so that let's see what the producers are saying. But stay right here. I'm going to travel so that I can start the presentation in a few minutes. So I'm hoping that you all will enjoy what we talk about tonight, but not only enjoy it, but also do something about it. You see, knowledge is power, but action is queen. Well, I had to say queen, cousin. But it's a very powerful situation, as you know. But you get to do the final decision. And the key is that when you have all of your assets together and you have all of your business in order, you sleep better at night, but also you know that whatever happens, it is taken care of. That's very powerful. So I hope you learned something tonight. And if you'd like to have the book, The How Money Works, Stop Being a Sucker book, please feel free to send us at Anaj Enterprises Inc. at gmail.com. Be glad to send it to you. Just make sure you give me your address. I forgot to mention that. You must have your address so that we can send it, because it's a physical book, not an ebook. Okay. And then also the ability to sit down with a financial advisor or a financial educator, and get some assistance. Just give us a call or send us an email. I look forward to meeting you, and I hope all goes well and you stay at peace, but get those affairs in order. It's important. So I'll see you in a few minutes. Stay where you are.
This is Dr. Jana B. Woodhouse. She is a nationally recognized financial advisor with World Financial Institute, Treasurer of Financial Advisor, particularly with us in Wealthway Financial Services, a financial education company to teach people how money works. And with that, I'm gonna get right into it. Jana, are you ready to go? Okay, so
Okay.
yeah, we're about to.
I want to welcome everybody. Thank you so much.
So,
Okay. But first and foremost, I need to get my presentation, which was there. And then, whatever. Okay, so I see
getting mic'd up.
getting mic'd up. This is a wonderful experience. You know, it's one of those things where technical stuff can happen. And unfortunately, I'm not seeing my okay, I'm gonna stop sharing. And I'm going to, yeah, return. So, okay. So what I'm going to do is I'm going to talk because I need to talk to you. This is Life Insurance Awareness Month. Am I muted? Yeah. Okay. Here we go. How's everybody doing tonight? Everybody's okay? I appreciate your patience. This has been really a wonderful idea that we had, and it's still going on being wonderful. Okay, and so what I'm going to do is I'm trying to share, but I'm going to start to talk to you. If we got to talk heart to heart, we're talking in our community. We got to just break it down, take it easy. Not that people are slow, but it's just that we have never really had financial literacy given to us. And tonight we're talking about your own bank. And in doing so, we're talking about, okay, so in that, we're talking about be your own bank. How can you be your own bank? But before we do that, I hope you'll allow me just a few moments to talk about really about what life insurance is. In our community as a whole, we know about life insurance, which is basically considered death insurance. You know, somebody is planning on dying. They want to protect their family, which is an excellent thing, which is necessary because we do need to be able to provide a legacy for our family. You know, it's unfortunate that so much is happening in our community today that we have to think about, and I certainly think about it when it comes down to individuals who have had, just like on 161st Street, this woman was driving her car to work and she got T-boned and it was all over. And so the first thing out of my mouth was, did she have affairs in order? Because that's a serious situation, is that did she have her affairs in order? And so that's what we have to be concerned about, but also what about the real benefit of life insurance? Okay, I'm gonna give this a minute to see what's going on so that is everybody in place so I can continue to talk. Okay, because we got some great information to share with you tonight, and it's important. Hopefully, all of you have read, I'm going to make this little plug, the How Money Works Stop Being a Sucker book, because that's very much important to get you started in your journey of financial literacy. If you haven't had the book, please feel free to send a request to the person who invited you to be on this call, on this Zoom, and also on those of you who are here in the office. That being said, we're going to talk about one of the major elements in financial literacy. And I'm just going to take it from here. Oops, that's not what I wanted to do. Heading forward is you got to have a foundation. You have to understand the concepts of general financial literacy, and then protection, and then deal with short term, which is your emergency funds, your debt management, increased cash flow, and your long term goals, which are building wealth, retirement strategies, and protecting. So I'm going to go through some of these slides just to go through some of the things that I think you should understand about protection. A lot of things like we thought about is that protection is against the loss of income or the loss of savings. And that's true. But also, it's not just that, it's to protect our families, to protect ourselves. You know, it's really funny that, and I'm sure you'll saw the video with Anthony Anderson. It said that he said, it's amazing that we spend money protecting our cell phones, we protect our houses, we protect our cars, or they make us protect our cars and can't drive. But out of all of this, what do we do to protect the person who is providing it? This is what's so important. And so that's why where life insurance may come into place is to protect your financial assets. That's general life insurance. But that's not all. And so I'm going to fast forward a little bit. Most of the cases with life insurance, we don't even know how much we need, you know, and so it should be about 10 times the amount of your income. In my opinion, it should be 20 times your income because we got a lot of stuff going on. But if it's 10 times, you're earning $50,000, you should have at least $500,000 worth of coverage. And in my world, it would be like $1 million. And sometimes we can't justify it. But the thing is that by the grace of God, there are opportunities by which we can't. And there are things with a proper financial advisor, you can get more than what your 10 times of your income. Okay, so that being said, let me go to the next slide. Here. So there's many things that you need to do, and how much insurance do you need? A lot of factors have to come into play. And as I mentioned on the show previous to this, is that your age is important. Things while you're healthy. These are some of the they don't have it. So that couples with the cash value of the life insurance. You don't want to build all this money and then because of a major catastrophic illness, you didn't die, that winds up taking most of your income. The key to life insurance is the fact that creditors can't get to it, okay? They can't touch it. This insurance agent, lobbyists are fantastic. But also when it comes down to long-term care, that's the policy that you can use and get income to take care of yourself and have your family come and take care of you and pay them. So there's stuff. But also the key is not touching your savings. It's not going in it. But there's only 8% of people over the age of 55 that have purchased any type of long-term care. And most of the time they wait till they get too old, or I'm running into a lot of people who are having knee replacement, care. And if that's happening, nobody's going to cover you for long-term care. See, the key is to get it before you need something, not after you need it. Because if you wait, it's too late. And again, like I said, the insurance companies are truly, like the casinos, they will win. So that's why long-term care is important. And we can go through that in another seminar about how important long-term care is. Right now, we're looking at the level of being able to handle the living benefit of life insurance, but also more so is to build and be our own bank. And to do this, we have to be able to build the cash value in our policy. And we should treat our life insurance not like a bill, but a necessity. Just like we breathe, it's a necessity because it takes care of a few things. Yes, it takes care of our family if the fact that death occurs and we need to take care of them and make sure that they're taken care of. That's why I say 20 times, because let's put it this way. Unfortunately, children that are left with money, people want to take care of them more than they do with the child who doesn't. I know it doesn't sound nice, but that's the truth. And the other thing is that, so that's one element. We want to be able to pay for our home. We want to be able to make sure that we don't leave, that we leave a benefit as opposed to a debt. You know, we do that a lot. We leave a lot of debt when we leave here. And a lot of people say, well, if I leave the debt, it's canceled. Not all the time, and especially if you're married. Hint, hint. You will definitely end up inheriting your spouse's debt. So be careful with that. But that being said, is that the other aspect to it, which I think is the most powerful, is the fact that we have people who have the opportunity to build cash value and live on their income cash free, tax free. See, this way you don't have Governor Hochul and Governor Adams, and you don't have Uncle Sam taking your money in taxes. And this is the way the wealthy have been doing this for years. We just didn't know it existed. Or we knew it existed, but what we did was pay just the minimum amount and never built cash value. Think about it now. Some of these policies are growing at the rate of 5, 7%. And what's happening to your money in the bank? Again, with the rule of 72, the average bank account right now is 0.09%, which means it's going to double every 800 years. So you're really going to need to leave something to folks because you're not going to be around for it. I know, gloom and doom. So on the good side, though, if you have something growing at anywhere from 5 to 7%, it might be not accessible to you right now, but it will be, and it will grow in the future. Tax deferred, which means you don't pay taxes on it now as it's growing, but also when you take the money out, you don't pay taxes on it. Now, some of you will say, well, I'm too old or have issues as far as being able to get coverage. Well, let me give you a little secret to that. How about the fact that you may have children, grandchildren, and you can write a policy on their, and you be the owner, and you get to control it because you're putting the money in. And if something should happen to them, God forbid, then yes, the policy will pay off. But what if nothing happens to them? Then you can, after a while, set them up as the secondary owner. So they get the opportunity when you leave this earth to have that control over the policy. See, these are all strategies. And that's what I wanted to portray tonight to you with those strategies. So that being said, this is our mission, is to teach 20 million families how money works within the next decade. My goal is to create people who have an unlimited amount of wealth because they understand how money works, but not only that, but they've implemented strategies that will free them and create not only for their generation, for them, but for the next generation and the next. It shouldn't be where we leave debt. We need to leave the benefit. So that's where you all come in because you need to make it your number one top mission is to teach how money works and what you learn tonight, be able to share it. Don't look at the difficulties, look at the benefits of what you will learn tonight. So that being said, do I have, there's Mr. Dan Brown, who is going to take us to the next level. And of course, those of you who would like to have a financial needs analysis, please let us know that this is something you would like and sit down with some of this, no obligation, again, I have to say, but it's about planning because if you don't plan, you are planning to fail, and especially in these times. So at this moment, I'd like to turn it over to my partner in business, Mr. Dan Brown, who's going to give you, and you want to stick with this so that you can see how this really works, how it could work for you, maybe, but it won't happen unless you start with it and then continue on. Okay, so he's going to share this with you now. Dan, it's your time. I hope everybody can see. Dan, unmute yourself. Oh. You hear him? Oh, must be me. Can't hear. Can you? Please read. So read.
Now, all these numbers I'm throwing at you, this is part of this illustration. It could be a higher number, a lower number. Maybe you need $1 million current, maybe you only need 100,000. Maybe you can afford to put in 500 a month or 1,000. Maybe you just can afford to start with 100. So all of these are variables, which is why the ideal is so powerful.
But she's gonna learn, so he's supposed to read the
But
poem.
I'm going to show you and it's math. So when you see it, don't think, well, I can't do that. Well, the example I'm presenting has a See, that's what they did every year. How would it perform? So in this case, again, my boy Sean Carter, he wants to dump 25,000 in. And I use this number for two illustration purposes. One is you dump money into these things. So you get your refund check, you pay your taxes, you can just dump it in there and they grow, sit somewhere and grow and never be taxed on it again. If you got a bonus on a job, this is what you inherit some money. Like, what do I do with that? I don't need it. You could dump it into your bank or into your IUL policy and let it grow somewhere tax deferred. Now, another reason why I show you this is because he wanted to starts withdrawing the money he put in. So it's a cumulative premium. At the age 64 was close to 200 grand he put in there. Although he had almost $600,000, he's going to start taking his own money back. Your money has already been taxed before you put it in. So when you withdraw your money, you don't pay taxes. So for the next 5 years, he's just 40,000, 40,000, 40,000 until he takes all his money back, and then he starts borrowing money. Now you see these negative numbers because he took out. He put 200 grand in. He has now withdrew $1 million. That's crazy. So that's what happened. He accumulated $1 million. He took it out, and the policy's still going. Now, in this case, he was doing it because he wanted the money. He didn't really care about the death benefit that much. At 90, he doesn't. You don't want to be 90 years old paying for $500,000 of insurance because insurance is always based on what? Your age. So if you're 90 paying for $500,000, you're gonna eat away a lot of money. So as he got older, let the death benefit start going down with his cash, so he's not paying for all that insurance. And if just to be technical, I'm a little nerdy about it, at age 90, we see this cash value just under 100 grand, and you see the death benefit 156,000. So the difference is he's paying insurance on about $56,000 of insurance. That's all he's really paying insurance on. That's the difference. So that's the difference between paying $500,000 or paying $50,000. You always got to have some insurance, of course, to make this a legal tax shelter. You have to be paying for some amount of insurance, and that's what we do. You make sure you keep the policy active and you keep some coverage on you. But even if as he stops, maybe at 90, maybe Sean won't be around by age 90. I don't know, but he's pulled out $1 million and he stopped paying, and he still has some residual money. If anything happens, he can give that to his beneficiaries. But look, even as it continues to grow, if he stays alive, this thing's gonna start picking up a little bit of steam again and grows a little more than 100,000. And then at some point he's so old that even the cost of insurance, that little bit of coverage, is gonna start eating away. So by the time he gets to 114, if he's still alive, they're gonna say, okay, the party's over, no more insurance. So in this scenario, this policy will last 114. Can we strategize and devise a way that he can keep this policy longer if he wanted to, or to make sure that we ultimately a permanent benefit? Absolutely we could. But I wanted to show you all the scenarios that if you don't, it can lapse, or if you don't, you don't keep enough cash in there or have enough coverage, there are other things that can happen that you may not be concerned about that happening at 114. That's a great thing if you're concerned about living to 120, 130 years old. But for most people, if they saw a scenario like this, they're not worried about that kind of stuff. So I've showed you two things: how you can borrow money out and pay it back, pay yourself, while your money you took out was still getting 7%. It was still growing even though you took the money out. And then you could borrow all the money out, practically virtually all the money out, and never pay that back because it's a loan. As long as you don't cancel the policy, you never pay taxes. So I know I said a lot, but that is how you be your own bank. That's how you use your policy to leverage for emergencies for yourself or your families, to lend. You could be your private banker for your whole family if you wanted to. Of course, many times your family loans will default, so you have to be mindful of that. But it's a great tool to use. So with that, if there's any question you want to throw something in the chat, feel free. Or if and if not, you can either unmute yourself, because we have a nice little group here. If you want to unmute and ask a question, feel free. But if not, we don't have to. Any questions? Odette? No? Shay? No questions?
How do I get started?
What was that?
How do I get started?
That's a great question. For all those who think this could be something that's useful for them, because it's not really for everybody. You don't have a divine right to get an IUL. You know why? Because it's still insurance. You still have to qualify for the policy. So the first thing is you got to make sure you qualify. You have to put an application in. But also, it may not be suitable for you at all. So the first thing you want to do is sit down with a financial educator to kind of take you through a basic financial plan for yourself to make sure this fits into your long-term goal. It may sound great, but maybe it's not the best thing for you to do right now. So for everybody on the call, some educator in our Wolfway family here in New York invited you on, and they can do a full financial needs analysis as a complimentary service. This is what we do. This is what our company espouses. We believe in financial education first. Other companies may charge you $500 to, I've seen $2,000 plans being developed. They're great, they're worth every money, but we'll give you a basic financial plan for free. And if that plan, it makes sense to you and it recommends that you start saving money in something like an IUL, then we'll get you going with a product like this, whether it's Transamerica, Nationwide, Pacific Life. We work with hundreds of companies to see which one's best for you, where you are, your location, your demographics, to pick the best product for you. So that's how you get started. As a matter of fact, as we said earlier, I believe Dr. Jana Woodhouse mentioned it, we're education first. So everyone who wants to start the way we espouse by getting an education, we will gladly send you a complimentary copy of our best-selling education book, How Money Works, Stop Being a Sucker. She showed it in the beginning. It's on Amazon for $16.99. If you'd rather pay them, you can. But if you ask your educator to have one shipped out to you, we'll send it out to you. It's a great read. It's a short read. It only takes about an hour, hour and a half. It takes me on the longer side. I read slow. I read every word one at a time. I don't have that eye thing. So read the book real quick and then sit down with an advisor and map out a strategy for your financial goals that meets you and your family's needs. So great question. Thank you for asking that, Kimberly. Any other questions?
Yes, Dad, there's another question coming in. Can you hear me?
I hear you.
Yes, one of the attendees is asking, at what year after depositing does it become profitable to withdraw?
That's a good question. So I can go back. So the answer is any money that's in your cash account, your cash surrender value, let's say, you can withdraw. And that's a good question, and I'll tell you why. I'm gonna kind of scroll back up to the top. With all life insurance policies, particularly permanent policies, they have very large surrender penalties in the early years. So this is a long-term strategy. If you're something you want to do for 6 months a year, can't do it in an IUL, you can't be your own bank. You know, Chase doesn't open banks and close a bank account 6 months, so you can't either. So if you put money in and you decide you want to close these things down early, you can. So because there are large surrender costs, that's going to eat the money you put in. In this case, my buddy Sean put in $27,000 in after insurance and other ancillary fees. His policy had $26,924 at the end of the year. But if he canceled the policy, he would lose another $7,000. So that's a big ouch. But to answer your question, in year one, if you want to borrow money out, he could borrow up that cash value, the $18,000, or most of that. So you got to leave some money in there to keep the policy going. So whatever's in this cash surrender, if you're looking at any illustration with your financial advisor, your insurance agent, this is the money you have access to, this cash surrender value. So, and after all the surrender charges for a company, most companies have 10 to 15 years surrender charges, somewhere along those lines. That's when those policy values and cash surrender values become the same, somewhere around there. So whatever in your cash surrender value, that's the money you have access to. And of course, I say that loosely because you can't take all the money out, but that cancels the policy. And that negates all the benefits of being your own bank. You have to keep the policy in force because the policy is the bank. So it has to have money in the bank for the bank to be a bank. Okay.
Next question in chat, what happens to Sean's cash value after he transits?
After he does what?
Transits, maybe die.
When he died.
Oh, when he dies. Okay, so at any point when he dies, it's the death benefit. In this case, let's say if I'm here in year 12, it's a $500,000 death benefit. If he dies, his family gets $500,000 tax-free. Life insurance is a tax-free transference of wealth. So it's a great way to transfer money. It's a great way to create generational wealth. You want to make sure your kids have good money? Take out $1 million policy, you die, your kids become millionaires. Not that you want to be suicidal, but it's a great way to build a legacy instantly. So whatever your death benefit is, and this one made kind of funky. I didn't want to go into too much about why the death benefit drops in this case, but it doesn't have to. This is what worked for Sean, but if you wanted to make sure you had a minimum of 500 and had or more, we could have designed it that way too. But he was really more concerned about having money, access to money whenever he wanted. So if he took money out early, it affected his death benefit. But as far as illustration shows, whatever the amount that the death benefit is at the time pass, then that's what you're going to get. And as you see later on in life, when the death benefit is up to $600,000, $700,000 almost, you pass then, that's what they'll get. There's more cash in there. Again, in this case, there's more cash than the original death benefit. Like in age 65, the death benefit, the cash value is over $580,000. So obviously, his family should get more than the 500 he originally signed up for. So in this case, you're going to get another 100 on top of that. So the death benefit will go up as the policy increases, and that's just depending on who the person is, when they started, how long they had the policy, and how much cash they dumped in. I could have showed a scenario where Sean dumped in more money at another time, and it could increase it even more so. So just want to be able to start the conversation on how it works. If you go dump more money in, there are restraints. As you go through a policy, you could have it for 10, 15 years. You may have a lump sum windfall come somewhere. You could just call your advisor or your educator and say, hey, how much can I put in my policy? And they'll run their calculations. Okay, at this point in time, the most you could put in is X. And then we got to keep it a legal product. We're going to keep it in the rules, the IRS rules, so it keeps its tax advantage status. So, but to answer your question, when he dies, whatever the running death benefit is,
Is Dan frozen?
No, it's not. Dan's should be still all on.
Yeah.
Dan's hosting, but I can't hear now.
Okay, you can go tell him.
Yeah, it's 8:00, you should close it down anyway.
You got it all, right?
Tell them to close it down, and Jana can close it out.
Well,
No, I was connected to his system. I'm not on anymore.
I don't know if I can be heard.
Now, I had you, well,
You can, you're live. Go
You're
ahead.
live on their feed, not the Zoom.
Not the Zoom. Let's see.
I can.
You should just close it out.
Someone's asking a question.
there are two policies. One may be a primary policy and a backup.
Close it out for Zoom, yes. And then you continue on your live.
Live stream?
Yeah.
No, people are engaged.